Welcome, Kevin, retiring to the stock market session one. How are you?
All is well.
It is September 8th, 2024. Welcome. So, as a stock market mentor, there's a lot of things that I want to cover to teach you my system, to about stock selection, about trading, about managing your account to make money to pay your bills, to retire into the stock market. And I've been in the business for over 30 years as a trader, and then mentoring for a little more than 10. And I feel like I hone my system to where it's pretty, I think easy, but it does take patience and time, and you have to put that in, and also to learn my principles, which I think are not, they're kind of contrary to what you might hear like in school or on TV. So I don't think they teach anything. I don't think they teach what I'm going to teach anywhere. I feel like in school, even in college, they kind of teach you more like employee mentality and not business owner independent mentality. And these trades we're going to do, I kind of developed them myself. I kind of took a little bit from different, I want to say mentors, and I put them down, I think, in an easy, orderly fashion. And we don't use like stuff online or seminars, because like all that stuff you're going to see online, all these seminars you can go to, they all teach different things. So I want you just to focus on what I have to show you. Don't read books. Don't look at seminars. I want you to focus on what I have here, and then apply what I have here. You'll have the result. Okay.
Yes, sir.
All right. Okay, good. So first thing is stock market selection. I think we'll just review this. There's 11 criteria to stock market selection. 11 criteria to stock market selection. We're not going to overdo it today. We're going to talk about, let's say, the first three or so, maybe the first three or four. Because why? Because there's like, just on the U.S. market, which is like the NASDAQ, the New York Stock Exchange. There's like 4,000 or 5,000 stocks, right? But only, let's say, less than 10% of them are good. So a lot of stocks don't even make money. A lot of stocks are kind of like a bad investment. Only the best stocks that are a good investment are like the ones that are like real companies that have like a real product, a real service, that have real employees, and they've been going for years and mostly decades. So like when you see somebody that says, "Oh, there's a new stock on the block," they have this or that, that's probably not a good investment. What we're looking for is the tried and true. Does that make sense?
Yes.
So like, for example, Pepsi. You heard of the company?
Yes.
Symbols PEP, Pepsi. Pepsi is good because it's a dividend stock. So put their PEP and put div. And let me look it up here for you. I'll put your computer's not on. PepsiCo. Symbol PEP on the NASDAQ. Share price 176.64.
You said so 17. What was it again?
176 and 64 cents per share.
Okay.
I didn't ask you what your knowledge is. Where are you on the knowledge base in the stock market? Have your own account, for example?
No, I actually I was dibbing and dabbing into Forex. And a friend of mine's, she moved to Thailand, but she told me, you know, how much she was doing well in stock options. So that's what sparked my interest. But I'm basically a novice.
So you haven't even traded yet stocks,
No,
but you traded Forex?
yes.
Okay. Do you have a stock market account? Like a Schwab broker?
Um, no, I just downloaded Trading View and
Okay. I
and
prefer you open an account at Schwab if that's okay. And the reason is because a lot of reasons, but mainly like Schwab broker, SCHWAB Schwab has the best 24-hour a day, 7 days a week customer service, access to brokers that are not only
okay,
going to answer all your questions, but they're going to walk you through the trade. They're going to pull up your account and help you in every way they can, and they're going to hold your hand if they need to. I'm going to teach you the system to trade, but they're actually going to, if you have a question on your account, they're actually going to access your account and help you through whatever you need. Does it make sense?
okay.
So write that down, Schwab brokers. If you don't, if for some reason you don't open your account at Schwab, let me know because, like for example, Robinhood is not good. They don't have brokers you can call and get help from. I don't recommend you do Robinhood. I don't know about TradeView. We can try to use them, but I don't know if they have 24-hour access to your money, and I don't know if they have like Schwab has like free check writing, so you can pay your bills right from your stock market account, which I'm going to show you how to do.
Okay.
Different systems. I know that Schwab is the best, but like with Pepsi, like 176. That means like for one share, you're going to pay $176. Does that make sense?
Okay. Yes.
Um, uh, to open your account is pretty easy online. You just have to like go to Schwab, I think SchwabBroker.com.
Mm-hmm.
Let me pull up the site. SCHWAB. Broker. It says Charles Schwab. Okay, Charles Schwab broker. That's the one. And they have an online sign up, and you don't have to send money right away, but maybe like at least put a few $100s in there, and you can start, or a few thousand, depending on where you are.
Okay.
But it's a few hundred, a few thousand, you can get going right away. There's no like major minimum, you know.
Okay.
Another thing is, go ahead.
What's the website again?
Charles Schwab, CHARLES, Charles Schwab,
Uh-huh.
SCHWAB, Charles Schwab broker. And it says here, actually, it says here Schwab.com, SCHWAB.com. That might work too.
All right.
Like I said, the other thing about Schwab is I was with a TD account, TD Ameritrade, which is another broker. I was with them for a long time, and they were the best, but Schwab bought TD. So now Schwab has all those bells and whistles that I got from TD Ameritrade, and all my TD Ameritrade stuff still works. So I'm with Schwab now. They bought my broker.
What platform do you trade on?
I just trade on my phone app, on the Schwab broker app.
Okay.
Do you how to use phone apps? Once you sign up your account with Schwab, you download the Schwab app,
Mm-hmm.
and well, actually, that's a good question. I trade on TD, on Thinkorswim phone app. That's my actual platform. Matter of fact, I don't have a picture for you, but I can show you maybe later. But write this down: Thinkorswim. It has, like Thinkorswim. That's the phone app. Also, it's called TD. TD. Let me see if I can pull it up for you.
So you don't look at candlesticks. You just
They have candlesticks in Thinkorswim.
Okay.
Okay, write this down. Thinkorswim mobile app, and then Charles Schwab. That's the one I use.
Okay.
You got that?
Yes, I have it.
Now you said candlesticks. Interesting question, because candlesticks has like also a strategy on showing you what they're showing you on the candlesticks, and it will help you with trading. But we're not like, you said that you were dabbling in the forex. That's a lot
Yes.
different than what we're doing. Why? Because the forex has to do with like supply and demand, and you can have it go up and go down like in one day, and the same thing in 3 months, go up and down. 6 months can go up and down. In a year, it can go up and down. That's not what stocks do typically. What stocks will do, like I mentioned Pepsi. The reason I mentioned Pepsi is because it's a good stock, meaning that it makes money. And this is the difference between stocks and forex or commodities. With stocks, when I said there's 11 criteria to stock selection, it's because I'm giving you the best stock, which has what? The best profit, which has the best perception for investors. And investors buy the stock, and the stock, what? It goes up. So the difference between like stocks and forex, or stocks and commodities, is that these stocks I'm gonna tell you about, they go up over time, so it's not really that much of a risk.
Okay.
Because what we're gonna do, we're gonna ride that long-term trend. Okay. So you're gonna have a major advantage with the stock market over forex. You have a major advantage in the stock market over commodities, because we can see trends over the 1 year, 5 years, 3 years, 10 years. And if you look at these stocks, like let's say, I'm gonna give you a couple stocks to look at. Microsoft, MSFT. We'll do Pepsi, PEP, and let's do one more. Let's do NVDA, NVDA. Let's do one more. Let's do 4. Netflix, NFLX. So that Microsoft, MSFT, Pepsi, PEP, NVIDIA is NVDA, and Netflix is NFLX. Now, so like you can pull these stocks up on either on your phone or on the computer.
Okay.
And what you'll notice is that they go up over time. The chart goes from the bottom left to the top right over 3 year, 5 year, 10 year. So it's not really random. We're taking advantage of the long-term trend. So we will make money over time. That's the difference. Does that make sense?
Yes.
So like, if I just have here the 5 year here. If I look at Pepsi, it says Pepsi here was 134 5 years ago. And now it's 176. So it went up 40 points, okay? Now that's not a major gain, but it is a gain. In other words, you haven't lost. Like, investors have not lost in 5 years. And that means something. You know what I mean?
Oh yeah.
Netflix. I got Netflix at 266. Okay, 5 years ago. It went up before the COVID. It went down in the COVID. It went up to 660 top right before the COVID hit. It went down to 177 bottom of the COVID. Then it went right back up, and now we're at a new high. Now we're at a new high, which is NH, right down NH equals new high. NH equals new high. Now we're in a new high 5 years later, $664. Actually, it hit 700 for the high. So what? So over 5 years, it went up and went down, but now it's up to an all-time high, breaking a new high, going up higher. It's going towards and above. It's going towards 700 plus for Netflix. So in 5 years, it went from let's say 260 to 600. It gained 400 points. It was more than double. That makes sense?
Yeah. That's
so
awesome.
That's a big difference. That's a big gain.
Yes.
Let me look up NVDA. NVDA. NVIDIA is even more profound. NVIDIA 5 years ago was $4, and today it's $102. So it went up. If it was a 5 to 100, it went up 20 times. It went up more than 20 fold. So $1,000 5 years ago is more than 20,000 now. That makes sense?
Oh yeah.
Now, that's not the only gain that I want to teach you about, because we're making gains on dividends, which is every 3 months. We're making gains on cover call, which is every month. So we're making additional money to this long-term trend. We're using the long-term trend as a foundation. We're making additional money, let's say monthly and quarterly, on a lot of the stocks I'm showing you.
Dividends is every. I'm sorry, I didn't catch that.
Dividends is every quarter. Write this down. Dividends is every quarter, which is 3 months. Every 3 months.
Okay.
Because there's 12 months in a year.
Right.
Every 3 months is a quarter. 3, 6, 9, 12. And speaking of dividends, Pepsi is a dividend stock. I'm gonna type in Pepsi, and I'm gonna give you the dividend. 3.06%. Write that down. Pepsi is 3.06%, and that's the yield, YIELD, and that's per year. And let me give you another dividend stock. Next one is MO. Marvin Oscar. And you'll know why I'm gonna give you this one in a second. MO is symbol for Altria Tobacco Company. MO is $53.69 a share. And this is why I'm telling you about this one. This dividend is 7.6% yield for the year. 7.6% yield, which is more than double Pepsi. Let's do one more dividend. What do you like better, Starbucks or McDonald's better?
Starbucks.
All right. Starbucks is SBUX. Sam Boy, Umbrella, X-Ray. Starbucks. I'll pull that one up. SBUX. $90 a share, $90.97. $90.97. And the dividend is 2.5%. 2.5%. So on Starbucks, I got 2.5. Pepsi, I got 3.06. And then on Altria, which is MO, I got 7.6. So you got 3 different dividends there, different amounts. And there's a reason why they're different percent return. But in a general sense, In a general sense, I'm going to tell you they're all kind of equal. Okay. Why? Because, well, the MO dividend is higher. We don't expect that much share growth. Meaning, if I pull up MO over 5 years, okay, I don't expect it to have gone bonkers. Matter of fact, 5 years ago it was $40, and now it's 53. It went up, but not a whole lot. Okay. Whereas Starbucks, you like Starbucks. Starbucks is a lot different. Starbucks 5 years ago was, let me take that back. Starbucks 5 years ago was $89, and now it's 90. It just went on a roller coaster ride, up, down, up, down. It's back to where it was. Basically, it's like $1 more than it was 5 years ago. But
you said it was
Starbucks. Go ahead.
It was you said it was $89.
It was $89 5 years ago. Yeah.
Okay.
So basically, it underperformed Philip Morris, but in a general sense, Starbucks could get you more share growth over time. It went up to 122 before COVID. The bottom of COVID, it was 73. Now it's back up to 90. The high was about 122, 120, 122. So this one made like $1 over 5 years, but it's getting you dividends every quarter. And guess what? I said we can make money monthly?
Yes.
That the money we're going to make monthly is in covered calls. The short for that is CC. Covered calls. Covered like you cover the bed with a blanket. Covered calls.
Yes.
Calls. Covered calls give you monthly return on your stock. And that's actually my specialty. I'm going to teach you how to make money monthly. The covered call trade is probably the best trade on the stock market overall.
Okay.
Arguably, because like if you're an apartment owner, if you own apartments, let's say you have a 10-unit apartment, you can rent out each room for a monthly fee, right?
Right.
Let's say $1,000, right? So each tenant will pay you $1,000 to live there, and you own the apartment, right? So you're getting $10,000 a month. Now you'll have expenses, so maybe your income will be half that. I don't know what your income will be, depending on if you have a mortgage or if you have to do plumbing, you have to paint the apartment, you have taxes. But whatever the cost is, the idea is that you're going to make a profit over that cost, like any business. With cover calls, you buy 100 shares. You buy lots. Write this down. Buy minimum 100 shares. And then what? Write the call. Write on the paper. Write the call.
Okay.
Monthly. 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 And that is going to bring you an income. So as an apartment owner, owns apartments and rents out the rooms, a stock market trader can own the shares, let's say, of, I don't love to do cover calls on Starbucks.
What did you say?
Sorry for my phone. I don't love to do cover calls on Starbucks because they don't pay that much, but you can certainly do it. I like to do cover calls on stocks like NVDA.
Okay.
Right, they have NVDA, NVIDIA. And so we can own blocks of 100 shares, and we rent those out to the public. We get a monthly income on those. You could do Starbucks. You can do any stock, but with Starbucks, I like to just get the dividend. I'm going to show you a different strategy with Starbucks. Like ideally, Starbucks, you're doing a trading strategy and you're doing dividends, whereas with NVIDIA and Netflix, for example, you're doing cover calls. So there's some stocks you want to have for dividends and some stocks you want to have for cover calls. They're all different.
Okay.
That's so unbeknownst to most people and even some stock market traders, the cover call will get you money every month. And the theory behind that is if you can do it repeatedly, which you can, if you stay on it, you can pay all your bills with these cover calls and retire to the stock market. That's what I teach.
Okay.
No doubt you've been to Starbucks all over the US, right?
Yes.
Starbucks Corporation, together with its subsidiaries, operates a roaster, marketer, and retailer of coffee worldwide. The company operates through three segments: North America, International, and Channel Development. They're international, by the way, so that's good. A lot of these companies that I'm going to show you are international, which means they're conglomerate. They're not just based in the US, you know, they're in South America, they're in Indonesia, they're in Europe, you know.
Mm-hmm.
So they go far and wide. And a lot of times you'll hear people invest in stocks, and you look at the actual company, and they don't have these criteria. They don't have any of these criteria that I'm going to tell you about, and they're not good. But these ones I'm telling you about: Starbucks, Pepsi, Altria, Microsoft, NVDA, Netflix. These ones are stellar stocks. They've done great. They have the criteria. And you can do either dividends or cover calls, making monthly or quarterly money. Questions?
So you mentioned that the last thing you mentioned about the cover call is that we can rent the shares to the public. Now, how is that done?
It's real simple. You just press a button on your app. But let me explain to you. Just put -1 call option. So which means you're selling one call option. Okay, that's the whole trade. So you own 100 shares, for example, on the basic cover call, and you because you have the shares, right? When you sell an option, you create the option because you have the shares, and you sell the option to the public, and that's easily done. So once you have 100 shares in your account, let's say of
So,
NVIDIA.
hold on. So you say it's like once you sell a share, you're creating the option.
Yeah, no. Once you own the
No.
shares and you
Mm-hmm.
sell once you own the shares and you sell the option, you create the option because the option is coming from your shares. Without your shares, there's no option.
Okay.
You know how you trade Forex?
Mm-hmm.
It's the same principle. When you buy or sell, you're just buying and selling your stocks. But in the cover call specifically, you buy 100 shares and then you sell one option. And I'll show you what that looks like. I'm gonna walk you through what that looks like. The best way to explain it to you, because you're a novice, you haven't done this trade before. Write this down. Pull up the option chain. Pull up the option chain. Not all stocks have an option chain, but the ones I'm going to show you do have an option chain. And the stocks that have option chain are stocks that have options. Like, for example, call options. Options are either calls or puts. Have you heard that term?
Yes.
Calls or puts. Calls meaning that you're going long, you're investing in the stock going up, and puts is you're investing in stock going down.
Right.
When you're doing cover calls, you're selling the call. Okay. So you're selling one call. I always use the word writing. You're writing, but it's really selling. Writing one call per 100 shares that you own. And when you write that call on a monthly basis, you get a monthly premium. Can you give me like a figure? You don't have to be exact, but give me a figure like you can, let's say within a few months, while we're doing our sessions, okay? What kind of figure, dollar amount, could we be trading for you for your account? 1,000, 5,000, 10,000, 20,000. Where are you going to be at when you start out?
3,000.
Okay, so nice little amount. Okay, 3K. I write that 3K. So what you're going to do is you're going to do a cover call on Palantir. Write this down. PLTR. Palantir. I'm going to pull it up for you. PLTR. This is it's a smaller stock. It's not as great as NVDA or Netflix, but it's okay. I mean, it's cheaper. Right now it's $32. $32.71.
Okay.
$32.71. No dividend on Palantir, but zero dividend. But they have a cover call. And can I walk you through that? Palantir Technologies builds and develops software platforms for the intelligence community to assist in counterterrorism investigations, operations in the U.S., United Kingdom, internationally. Remember, internationally, that's important. It's not just the U.S., it's all over the world. Company provides Palantir Gotham, a software platform which enables users to identify patterns hidden deep in data sets, ranging from signal intelligence sources, reports for confidential informants. So this is like a counterterrorism company. They get military contracts. Understand?
Yeah.
So we can't go ahead and use the service, but rest assured, the stock is going. They're making revenue, and they have a cover call, and it's one of the stocks that I can recommend to you, which is your price range. Okay. So Palantir is going to cost you $3,271. Okay, for 100 shares.
Okay.
Because it's $32.71 times 100. I got $32.71.
Mm-hmm.
Now, when you open your account, you're going to open up margin account. Write that down. Margin account. Write it down. With a margin account, you have an advantage because, for one thing, like if it costs a little bit more than you have, you can still buy it. For example, you put $3,000 in there, which you say you can do. That's $3,000. You can buy $3,200 in stock. No issues. Okay.
Okay.
So you can like put that extra shares without having to put that extra money. That's a margin account. Now, I don't want you to go into margin too much. Write this down. Margin max 33% or 1/3, which means we don't. If we buy Palantir for 3,200, and we only have $3,000 in there, then we're technically margining $271. Okay.
Right.
33% is like if you have 10,000, right? I want you to margin no more than 13,000, which is 1/3. Get it?
You said if I so with 3,000, the max that I can
around 3,300. Yeah. No. I'm sorry. 3,900.
No.
3,900.
Right.
3,000 plus a third will get you 3,900.
Right.
Because you're going to get 3,000 plus 300.
Right. Okay.
Which is 33%. Let's just say 4,000. It's the same. It's very close to 4,000.
Right.
However, I don't want you just to spend 4,000. We're going to be very particular. We're going to be very shrewd. We're going to take our time to pick our stocks. We're going to vet these stocks. I want to make sure they work for you and the dollars work for you and the cover call pays, and that's going to start getting your income. Now, if you feel more comfortable, you can put all the money in there. You can actually put $3,300 in there, and that way you won't have any margin. But you still have to have a margin account. Have to have a margin account to trade. You don't have to go on margin, which is to borrow money, which is to buy more stock than the cash you have. You don't have to do that. I'm telling you that's a choice for you. That's an option. The risk of going to margin is if you put $3,000 in your account and the stock goes up, that's great, you made money. But if you put $3,000 in your account and you buy $3,300 and the stock goes up, now you're making money not only on the $3,000, but you're making money on the extra $300. So you're making more money. Follow me?
Yes.
But if you put $3,000 and you buy $3,300 in stock and the stock goes down, now you're losing your money faster because you're losing your initial $3,000, but then you're losing the money on $300 which you don't have. So it's going to make you lose money faster, which is a higher risk. So you can write down more margin, more risk. That's why I recommend no more than 1/3 ever. I don't even do 1/3 unless I'm doing a special trade. But it's there for you. If you can't get there, we'll get you there. Trust me. There's ways. Questions?
No, not on this. No.
Okay, how strong is your math?
Pretty good. Not bad.
What's 5%? What's 5% of 100,000?
5% of 100,000.
Yeah.
Is $500.
5,000.
5% of 100,000.
Yeah, it's 5,000.
5,000. Okay.
You got it right. You just have to add a zero. Out of 10, right? 5% will be like 0.5, like not even one. Like one would be 10% out of 10, right? So 5% will be a half of one. Out of $100,000, 5% is 5,000 because 100,000 is 100K, and 10% would be 10,000.
Right.
Like out of 100K, what's 50%? Out of 100,000, what's 50%?
50,000.
Right, good. So 25% of 100K would be what?
25
grand.
Right,
and then 10% of 100K is what?
10,000.
Right. And then 5% of 100K is
5,000.
Right. And we're looking to get around anywhere between, write this down, 3 to 5% return per month on CC, which is cover call. 3 to 5% return per month on CCS, which is cover calls.
Okay.
Which is to say that on your $3,000, you can buy this $3,200 stock, and you know how much 5% is going to be? 4%, 3 to 5% on $30,000.
Yeah, that's like man, that ain't too much.
Let's do the math, shall we?
It's like
pull up my calculator.
Like $150.
Yes. See, I'm glad you know math because like sometimes I do these seminars, these sessions, and I'm teaching people math the whole time. And with you, I'm not gonna have to do that because you know your math, right? So what I do, I go to the stock online. Also, you can do it on your phone. You click on options, okay? Click on options. You pull up the option chain. And today is September 8th, right? So we go out 1 month. So we do the cover call for 1 month out. So in September, we'll do October. October, we'll do November. November, we'll do December, okay? Now, the closest one is October 11th, which is a month and 3 days. We don't really count Sunday because it's not a work day. So we're going to go, write this down, October 11th, Palantir, PLTR. And then this is called the option chain. Option chain. So you click on that, you pull it up, and then you're gonna go to October 11th, which is, it says here 33 days. Close enough, okay? That's a month, right?
Yes.
Closest one. Now, the stock is 32.71, remember, okay? This is the magic of this whole session, because if we never talk again, this is how you retire. But we are going to talk again, but I want you to be listening now.
Right.
You buy the shares here at 32.71 at the market price, okay? We're going to write the call or sell one call on 100 shares. I'm going to say 32. In this case, we can do 32, okay? Which is just above the strike price. Wait, hang on. Oh no, that's less than strike price. We're gonna have to do. We're gonna have to go. We need a little more time. We have to go October 18th. Okay. We're gonna go 40 days, and this is why, because in this case, 40 days gives you a little more time, a little more money. Okay. I'm gonna explain this later, but for this trade, we're gonna go 40 days. We're gonna go October 18th. Okay. All right, now, and these numbers are much better. Okay, so we're gonna write the 33 cover call. Write this down. 33 strike.
33
strike.
Strike?
Yeah, STRIK strike. Yeah.
Now
33 strike, it pays 115 by 123, which is the bid ask. Okay. So write down 1.15 by 1.23 bid ask. Okay. Now, now with that kind of bid ask, because we have a lot of volume. By the way, when we talked about criteria, 11 criteria, one of the criteria is volume. If you have you have to have a lot of volume to be in these stocks that we're writing, okay, that we're investing. Volume meaning how many shares traded per day. Okay.
How many shares per day?
Yeah. And the shares I'd like to be traded per day is at least 2 million. Write down criteria, volume, VOL, 2 million shares traded per day. That's 2 million plus. Okay. Now, Palantir shows 50 million traded on Friday, which is below average. So 50, they're way, way, way above the minimum. These are 50 million per day. And I'm going to tell you why that's important. Okay. Because when you have a high volume and you look at the bid ask, the bid is what you sell it at. In this case, 115, that's the bid. Write it down. And write down October 10, 18, 24. That's for next month. It's next month and then 1 week after. And the ask is 123. The ask is what you pay when you buy the stock. The bid is what you pay when you sell the stock, or in this case, the option. You sell the option. Okay.
You're selling it lower?
Yeah, you have to sell for lower and buy for higher. That's called this. Write this down. Spread.
Okay.
The spread is the distance between the bid and the ask. Okay. The spread is the difference between the bid and the ask. So, Wall Street is going to make their money regardless. Okay, even if even if Forex you have a bid and a ask, right? But Wall Street is going to make their money. So they're gonna, if you buy and sell, you go bid and ask, and if you buy and sell right away, you're going to lose probably a few cents, depending on what stock you're in. And that's the spread. You want to ideally have a trade that has a low spread, a tight spread, right? Tight spread. That means the bid and ask are close together. Tight spread. And 115 by 123 is a tight spread, but we're going to improve that. We're going to improve that to make you more money. Can we do that?
Okay.
So what we're going to do, we have 100 shares of Palantir, okay? We're going to do limit order, right? Limit order. The value of a limit order is we're going to pick our price, okay? We're going to choose our special price that we want to get. And if you have a high volume, the chances of you getting your limit order are very high, okay? And in this case, the bid is 115, ask is 123. We're going to put a limit, write down limit 120, which is right between the bid and the ask, okay? All right, 120. And 120 is going to be your cover call. That's $120. Because 120 is $1.20 per share, okay? And we're doing cover calls, which is per 100 shares. So you multiply the 120 by 100 in your case, you have 100 shares, gives you $120. So this cover call, this first cover call you can do, and there's a lot of different stocks you can use. There's other stocks, but in this case, if we do Palantir, you put in $3,000, you're getting $120. And let's do the math on that. Are you ready?
Yes.
32.71, which is the share price, divided by the premium you're going to get, the limit order, between the bid and the ask, 1.2. I'm sorry, I did that wrong. I did it wrong. It's 1.2, because that's the premium you're going to get, divided by, that's the limit order, divided by 32.71. 3.66%, right? Up to 3.67%.
Divided by, what is it divided by again?
The premium, which is on the option chain, which is the cover call premium. In this case, 120. So 1.2, 1.20, same difference. Divided by the share price, which is your investment cost, 32.71.
Okay.
Equals 3.66%, which is 3.7% rounded up. 3.7% return. Now, so basically this trade gives you $120 for the next month cover call, 40 days out, okay? Remember I said, between 3 and 5% per month?
Yes.
So this is 3.67, right in there, okay? Now, how many months are there in a year?
12.
Let's make a goal. You like goals? Goals are important, right?
Oh yeah.
Wise men said, if you have no goal, chances are you'll never get there. So have a goal, right? So the goal is to write this down, 10 CCs, which is cover calls, right? 10 CCs per year. per calendar year on your stock. Okay. 10 cover calls per year. And you can do 12, but in this case, we have 40 days, so it's probably gonna end up being 10. Okay. But there's different reasons why you might have a gap, but let's just say 10. You can do 10. Okay. Write it down.
Okay.
And we're making 3.67%, 3.67% per month. After 10 covered calls, we're making 3.67% per cover call. We do 10 cover calls a year. What's the percent return at the end of the year? If it's 3.67% for 1 month, how much is it for 10 months? For 10 cover calls.
10 months.
If it's 3.67% for one cover call, how much is 10 cover calls going to pay you?
$300.
Just move the decimal over 1. So instead of 3.67,
3,000.
It's not dollars, it's percentage. And just do percentage, not dollars, okay? 3.67% for 1. For 10, it's 36.7%. That's how you do it. You move the decimal over 1 place. So 3.67 equals times 10 equals 36.7. Follow me?
Hold up, I'm a little confused.
It's a percentage.
Okay.
It's a percentage. Remember how we did 5% out of 100? Remember that?
Yes.
Out of 100K, we did 5K. Remember how if we do 50% of 100, you said, well, I asked you what's 50% of 100K, you said 50K.
Right.
And I said 5% is 5K, right?
Right.
So you're just adding, you're just moving the decimal 1 place. 5% becomes 50%. 3.67% becomes 36.7%. That's all we did.
From the 3,000, right? Off the 3,000?
No, we're not doing dollars. We're just doing percent right now. Don't think about dollars. It's percent. Later on, we're going to transfer the percent into dollars. Right now, it's just percent. 100%, 50%, 25%, 10%, 5%, 1%. We're just doing percent. 3.67% is a small percent out of 100. Okay. But if we do this cover call 10 times, which is 3.6% a month or every 40 days, we do it 10 times, we're going to get 36.7%. Does that make sense?
Okay, I thought you said, wait a minute. You said 10 covered calls per year or month?
Yes. That's the goal, 10 per year.
Okay.
Was that the percent a little bit over your head? This is the trade. We'll get it. We're gonna get it. Okay, don't worry.
Okay.
I can explain a different way. Okay. The truth is, the percentage is just a gauge of how much it really is. You were thinking dollars, right? So let's have you thinking dollars, right? It's $120, but per 32.71. Okay. It's $120 for 32.71. That's for 32.71 invested. For $3,271 invested, you get $120 per cover call. In this case, for every 40 days. Now, granted, you only put, in this case, you could put 3,000 there. You can use 271 margin. So the return on 3,000 is a little better. Let me do it for you. We go like this: 120, Kevin. 120 income divided by 3,000. Okay, gonna be a little bit better return. 4% return. It's a little better than 3.67 because you're in margin now. Okay. So one reason to use margin is if you're getting consistent cover calls and you're in a good stock, that's one reason to use a little bit of margin. And in this case, it's giving you a little bit better percent, 4%. In which case, if you're making 4%, now follow me. Let's see if we can do it one more time. If we're making 4% for one cover call, what percent are we making for 10 cover calls? Can we do that?
Is it 40%?
Yes, you got it. 40%. And the initial question was it was 3.67, and then times 10 is 36.7. So 4% becomes 40%. That's right. And one more zero would be 400%. Right. Mm-hmm. But here's the magic of this trade. Let's just round it to 40% because that's easier to deal with, and you may be in margin anyways. We don't know yet. 40% return is like putting $3,000 and a 40% return. So you put 3,000. So the calculation 3,000 times 1.4 because you're going to get your money back plus 40%. So 1.4. It was 4,200.
1,200.
Yeah. 400 profit, but add the 400 profit to your initial investment, 3,000. You got 4,200. 4,200.
42. Mm-hmm.
Now, let me tell you, there's a lot of different scams and schemes and systems of business investment trading. Okay. Let me warn you, the ones that promise to pay the most are more chance they're either a scam or you're going to actually lose money. Okay. So whenever you do an investment, you don't want to necessarily get a high return. What you want to get is a safe return. Okay. You want to get a consistent return because why? Because if they promise you, oh, you can get 10% a month or you can get 100%, 1,000%, whatever they promise you, believe me, the higher they promise you, or the higher the system that shows you to get a return, the higher your initial investment is at risk. Okay. So I'm showing you these trades, these systems where you can get a consistent return, but your investment will be relatively safe, or the risk will be lower. You can say you reduce the risk. Okay.
Mm-hmm.
That makes sense?
Yes. Mm-hmm.
All right. So when we're done with this recording, I'm gonna send you the recording. I want you to download it to your computer. I want you to review, and I want you to write down some notes. Okay. And I want you to be ready for the next session, and with a clear mind. And I want to have all your questions answered. And back on this trade we just did, we could get consistently 40% return per year. And if that's the case, you're going to retire, I mean, most people are happy to get 10% return a year. Because I think the market gives you about 11% return a year. So if we're making anywhere near 40%, you're doing great. Okay. Not all stocks pay 4% return per month. Matter of fact, very few stocks pay that much per month. And if you can get 4% per month at 40% a year, you're doing great. And you're going to outperform the market. You're going to pay some bills. I mean, what would $120 do for you every month? What would that do?
Nothing.
Can I pay maybe for some gas?
I would rather keep it in the market.
Wonderful. Actually, you make a good point, because look at this. If you put the 120 and you keep it in the market, on month 2, do the math. 32.71. Actually, they did this at 120 divided by 32.71. You can buy 3.6 shares, almost 4 shares of Palantir. So month 2, you can have 104 shares. Month 3, you'll have 108 shares, 112. So you can eventually have 200. You eventually have 200 shares. What I would do is make some deposits. Are you able to do deposits in your account monthly or weekly or wherever you get paid?
Yes.
So you can build up your investment faster. You're not just gonna like take $3,000 and then that's it. You're gonna support your account with consistent deposits. Is that fair?
Yes.
So maybe 120 won't do nothing. Give me one bill that you have that could be. Give me one bill and how much is it? Give me any bill you have a month that you got to pay.
My phone bill.
How much is it?
It's $80.
Okay, well the 120 will pay you your phone bill. Is that fair? They have $40 left over to have a nice meal. Is that fair?
Yes.
Give me another bill that you have more than 80.
But I would my storage bill.
How much is that?
That's 120.
There you go. So you pay your storage with a cover call every month, a Palantir. That's one way. Okay. You said you would build it up, but I'm just giving you some ideas. Okay. Now give me a bill that's higher than that. Give me a bill that's higher than that.
The room rental is $700.
Okay, $700. So we're gonna work it up. Pay $700 a month. Let's get to that. Can I do the math on that?
Okay.
At 4%, we did 4% because we rounded up and we may be in margin. Okay. I'm doing the math for you, okay? 700 divided by 0.04. 17,500. So at 4%, Kevin, at 4% return per month, to make $700, okay? You're gonna have to have $17,500 invested. Write that down. $700.
17,000.
17,500. $700. Okay. There's a goal. So 17,500 times points, write down 0.04 equals 4% equals $700 in this case per month or per cover call. So this is can I tell you how to do that math? Can I tell you how to do the math?
Yes, please.
You take the bill that you want to pay, or $700, or take the amount of money you want to make. Okay. You can apply this to how you're actually going to retire. Okay. So you need to make 700. All right. Pay that rent, right? Then you divide by hit the division, put 700 in the division, and then by the percent return. Okay. The why percents are important. In this case, 4% is 0.04. You understand?
Yes.
So 700 divided by 0.04 equals 17,500.
Okay.
And that's the math. So one cover call, which is $3,000 in Palantir, will pay for your phone bill or what bill was 120?
Yes.
Storage.
The storage.
Right. But when you get higher amounts, you can pay that $700 bill with 17.5K. We're going by percentages. Okay. Now, the difference between cover calls and like Forex or you want Forex is that Forex, you can actually lose money on that trade. Am I right?
Yes.
With a cover call, you have a big advantage because when you write the cover call, when you have the shares, like I said, you rent out your shares. That cover call on that cover call trade, you can't lose money. Okay. On the basic cover call trade, you can't lose money because they're going to deposit that 120 or that 700 right in your account when you write the cover call. The way you can lose money is if the stock starts coming down. Okay. And the stock will go up and down. Okay. The stock will go up and down. Okay. But that cover call money is going to come in every month, Kevin, or every 40 days. It'll come in. Okay. Another way to say it is the Palantir stock will go up and down. You may lose money, you may make money, but the cover call will come in every month. So it's like after you do it for 10 times a year, you're getting 40% return. Okay, then you can think about it this way. You get 40% return, then you look at where the share price is. It might have gone down a little bit. If the share price has gone down a little bit, that's okay because look, let's say share price has gone down 10%, right? At the end of the year. But you're getting 40% returns on the cover calls, or 36% return on the cover calls. Let's say 40% return. And the stock comes down 10%. So 40% minus 10% is what?
What was the percentage again?
I'm giving you an example. If you're making 40% return on the cover call, and the stock comes down 10%, where are you at? 40% minus 10% is what?
I'm at 30 now.
Right, yeah, 30. So you're still good. You're still 30%. So I'm not saying you can't lose money, but the cover call itself, when you get the paid money, that's in your pocket. That stays in your account. That's good to go. That doesn't lose. But you could lose money on the share price if it declined. Do you understand?
Yes.
And in the example I'm telling you, if you're getting 40% a year, which I just showed you on paper how you get 40% a year on Palantir, you're writing the cover call just above the strike price. In this case, 120, which is a limit order. You do a limit order because you have a lot of volume, which is important. Ends up being 3.6%, but with margin, it's 4%. And if we make it 40% a year and the stock happens to decline 10%, which it may go up and down, but let's say it goes down, you're still, you can make a 40% return. And if the stock goes down a little bit, you're still going to make a 30% return. You're still good. That makes sense?
Got it. Yes.
Now, obviously, this is you a novice just starting. Okay.
Yes.
I want you to be patient with yourself. Okay.
Okay.
This is not a get quick overnight scheme. Anything that you can do fast, if it's a get quick fast, get rich quick fast, you can lose it fast. Is that fair?
Yes.
I want you to get rich slow, so when you get it, you're gonna keep it. Because when it's slow, you earn it, and you're consistent. Consistency. Write this down. Consistency. Because if you're consistent with your income, with your monthly bills, paying your bills, getting cover costs, consistent, over time, you can iron that out. It's going to be consistent, solid. It's going to be more reliable. You're going to get comfortable with these trades. And I'll show you some more trades when I'm making more money. But I don't want to hit you over the head too fast in one day. I want you to just go baby steps, step by step. It's kind of what we're doing. I haven't really discussed dividends too much. No worries. We'll get that. Haven't really discussed the criteria. Don't worry. One of the criteria is volume. Don't buy a stock that has low volume. Buy a stock that's high volume, 2 million shares a day or more. Okay. In this case, Palantir has 50 million. You can see it when you pull it up. Okay. You're doing limit orders. We're doing cover calls. We're making anywhere between 3 and 5% per month. And over the course of a year, you're doing great, regardless. And start paying bills, and that adds up. You said you're going to keep it in there. Okay, let it roll. Let it build up. Put more money, because the more money you have, the more income you're going to have. And if you can get this consistent, you're going to be able to tire the stock market.
Yeah, that's I don't want to I don't want to touch that money until
Build it up.
I build it to the point where um, I can take out at least 10,000 a month, and it's still a large amount inside. So I want to learn, and I just wanted to
Okay.
build.
Can I give you some homework?
Please.
10,000, right? 10,000 a month. That's a good goal. Okay.
Mm-hmm.
Your homework is to find out how much you need invested to make your 10,000 a month if you're getting 4% return. That's your homework. Don't tell me now. And I explained it to you just like 10 minutes ago, the formula. What you divide by what? So find that, don't tell me now, but find out, work with it. Listen to the rewind tape and find out how much you're gonna need at 4% return to get 10,000 a month. That's your homework.
Okay.
I went over it like not less than 20 minutes ago. Sound good?
Yeah.
Okay. Questions before we wrap up.
None right now. That's you gave me some stuff that's new to my brain cells to work with. So
yeah, it'll come to you. You'll get more comfortable. You'll see how it works when you start doing the actual trade. You'll see how it works. If you can do consistent deposit, you're gonna build your account up, keep the money in there, and then once it starts becoming meaningful, then you can start paying your bills.
Yes. So I guess that all determines on
you doing the proper investments, picking up the proper stocks, and doing the monthly trades, and doing the proper trades.
Okay.
We talked about like a rough outline, but that basically on paper that works. I just have to do it in real life. Sound good?
Yes, sir.
Okay, I'm gonna send you this recording once I get it within an hour or so. Download it, re-watch it, and then write your notes over. And your homework is to find out how much you need to get 10K if it's at 4% return. And that's the first step. That's the first big step. Kevin, welcome.
All right. Thank you very much, Eric.
My man. Next week, same time, or you want to let me know?
Yes, sir. Yeah, I'm actually headed home after this week, so Sunday I should be home.